So everything I'm sharing is educational purpose only. It's my opinion only, and maybe I will be sharing some of the things around market, but it's not a trade, it's not an advice, it's just my opinion. Now, what happened
Basically,
to
take it with a grain of salt, right?
yes, take it, is yep, thank you, Ron. So look at what happened last week, and I hear this a lot of people kept saying, now banking industry is going down, and is this 2008 all over again? 2007, 2006.
The new thing I'm hearing on CNBC
Mm-hmm.
is that in 2008, 2009, it was too big to fail.
Yep.
Now the new word is too small to succeed.
Yep. So what you are looking at, that banking industry, the banks failed when 2008, and during the financial the downtime recession 2008 2007 that happened. 2009, 240 banks went up out of business. 2010, 157. But what you are looking at, since then, we know there were a lot of behavior happen in the financial world. So when new administration came in, they tightened up the financial industry so much. But look at that, the trend from 2010, it went big jump down. It was stable for a long time. In year 2017, only 8 banks went out of business in US. 2019, 4. 2020, I was surprised that 2020 after pandemic, we might see some happen. But look, really nothing really happened. 21, 22, no single bank went out of business. So all of a sudden now BSB went out of business. Now people are panic. Banking industry going down the hill. So guys, do the math. Is this really the time to be panicked, or just calm down? It's normal what you're saying. Nothing. So nothing really is coming out of that big surprise. But the Silicon Valley Bank, anybody, I'm sure we have people in the industry knows. I would love to hear your opinion. But these are some of the things happen on 2008. The risk taking, all the loan people. I know a lot of people back then used to get loans like that. You don't need any paperwork. Just like they will make up all those papers and graphs, and anybody want to have money, go buy it, buy that. Housing bubble was going crazy. But this time the BSB bank faced the liquidity crisis because most of their depositors, people who did the consumers, they all try to go and take the money out at one point.
And there
So
were some big ones. I
yes,
don't know if
big
you knew
ones.
that, like some large Fortune 500 companies in Silicon Valley had all their payroll money with them. They had hundreds of millions of dollars
Yes.
deposited.
When people talk about taking out money at one of the banks, like where are they putting it? Like they're taking out in briefcases? Like what does that mean?
So
So
Like,
electronically for large amounts, right?
Kellyanne, what they do, they put this money in the usually in the less risky in risk in the bond market, in
Yes.
short term, long term investment in the
right,
bond
right,
side. But
right.
then because of this BSB put a lot of money that they put in a long term bond, and
Yeah.
most of their clients are techy,
Yeah.
new business who has emerging business coming up, and then what happened last 2 years, 3 years, we are seeing that tech industry is getting hammered because of this financial tightening happening now. Growth
Right.
industry is
NASDAQ takes a
not
beating.
there. Yep, that's what tech is beating. So BSB was for a while trying to figure out a way to maintain their existing operation, like maintain the payroll services and this service. At the end, it could not make it happen, and they had to sell their bond early, withdraw, and take a huge loss. That
Yeah,
caused
yeah.
more panic and so on. Okay,
Would
so
you say like it's inappropriate for banks to take such massive positions in anything, including something like the bond market where they deem it safe? Like, is that the inappropriate behavior they were doing? Just
I
taking way too
am
big a
not.
position?
I'm not in the banking business, but I would do that bank has to make money somehow, right? You have to remember, everyone goes to bank. It's, oh yeah, there's a free checking, there is a free this, free that, but people don't read those those fine print. What is the condition of the free coming, right? So
So
somehow, so when they
she,
take your money, like let me finish it. They take your money, and then I see that what happened. They put the money in. They give you like a cheese, carrot. Oh, if you put your money, keep your balance 250 grand for next 90 days, we'll give you $2,500. A lot of people goes into deals like this. What happened? Boom, they got the money at their
so
hand, so they will use those money.
guys understand the banking
Mhm.
process, right?
Mm-hmm.
For every dollar that you deposit,
Mm.
the bank lends out $9.
Yeah.
Mhm.
Yeah.
It's
That's why I was
not
curious. Like, would it be healthier if the banking was regulated to like only 1 to 5 leverage and not 1 to 10
like,
leverage?
so wait,
Yeah.
based on that, what they lend out to is what's critical, or
Mhm.
what they invest in.
Mm-hmm.
That's what Mushi is trying to say,
Right.
is right, or maybe Mushi, you didn't
Yeah, it
say
is.
it,
And
but
the both are
they
lending side. Yeah, what they're investing in this time, BSB got caught with the investing side. Big money they put in the
yeah.
bond, and then
So
bond. Go ahead.
they
A lot of
invested,
banks, a lot of banks were leveraged up 1 to 38,
guys,
1 to 39 during the financial crisis, right?
do the math on this, right?
Mhm.
So what they invested in was bonds that, with the interest going up, if you all know anything about
Right.
discounting cash flows, right? Because if the interest was going up, the value dropped. I'm
Yep.
an accounting
Mhm.
person. So
Right.
what happened
Right,
is,
right.
Big
when
time.
they had to do their balance sheet, they had to do mark to market,
Mm-hmm.
and there was a massive unrealized loss. And
Mhm.
what
Right.
they were trying to do was raise the funds
Mm-hmm.
to make themselves whole. And somebody leaked out the rumor, not the rumor, fact, that Silicon Valley Bank was in trouble. And that was what triggered the bank run. $40 million
Right.
in one day,
Mm-hmm.
period.
Right.
40 billion.
Billion. Right.
Let's give back Mushi the time.
Yeah.
Yeah, sorry,
Right.
Mushi. Yeah.
No, that's okay. Yeah, I wanted to hear others' opinion, and that's kind of panic got them crisis, and their withdrawal is happening, and boom, there are a whole panic in the industry market. Is this the trend? Are we going to see that our recession and coming up? And there's many folks earlier said, "I told you so. Recession is coming. This is the sign." So now what you're looking at recession since 90s, 2000, and you can see 2008. This is a gray represent the recession time. During the recession time, what happened? The bank as bank was increasing their capital ratio, the risk bank is tightening their whole banking process. But look at this, that the ratio is like, since to 2020, here is sitting there ready to went at some point too high and slow down is slowing down, and capital that that capital ratio, people are also, just spending their money in order to withdraw the money from the bank in order to maintain the inflation and some of the savings data. I'm leaning to the what you are going to see the soon, that pre-pandemic time, people, certain amount of money people had it, but during pandemic it made people start saving more and more money. So earlier when inflation was going higher, people thought, I have the money in the bank, I can handle it. But then earlier this year, there was some other crisis happened, and where you guys already saw labor market shortage, and you are seeing the inflation and so on, so coming in. So people had to tap into their savings in order to correct saving money in order to maintain their day-to-day life. So that's coming back to us, have coming same saving side at the same time what banking industry, that some of the regulation you are hearing, the tightening, that Fed interest rate is coming up. What Yasmin just lean into it. Here you can see before recession time, and during the recession time, what happened? Banking goes here. It represents the tightening, the Fed in increasing the rate and so on coming up. That's also hammered bank with their bond rate and the money they invest in the long term in market.
During the housing recession, the banks were leveraged up quite a bit more, right? I heard it was like
Yes,
1 to 38, 1 to 39. A lot of banks, like
correct.
crazy leverage, and the banks are the banks are pretty low leverage now. And I mean, comparatively, right? Like it's
Right.
not like that, right?
So,
Okay,
so
comparatively.
as you are going to be hearing, and you see that when Powell did his whole show on a Congress or Senate, that that is this the end, and are they going to be increasing the rate and stuff? They still have room. Look at that. What happened before? When if we face more time, we will have to see higher, and besides increasing the rate, tightening the financial world, is the curve is going higher. Okay, so they will find areas where they need to tighten in. So here, what you're looking at, headline CPI and core CPI. The difference between this, the golden color one you're seeing, it's include that all the food, basic our food, clothes, you buy things. So at some point in during 2022, you saw that inflation almost went to close to 9%. But then things were very expensive, and then of course that's when Fed started figuring out, okay, we cannot stay zero, we need to start increasing the tighten the financial industry, increase their rate, and kind of figure out regulation side what else they can tighten up. So banking side also get tighten up their practice of lending money, and that's when you saw that big growth companies are getting hammered, and hence you are all seeing that in stock market, that what happened, the tech and growth, whenever this happens, typically they are the one first to get hammered. But you're looking at it at the here from there, when they started increasing the rate last year, slowly it came down below around this person time around here. But the shocking part is the core services one. If you see, it's almost like plateau since last year October, sitting there, and so not going higher. And that's when earlier this year you heard from Fed Powell, when they said, "Do you see the sign of pausing it or increasing? What is it?" And whatever statement he made earlier, couple weeks ago or end of January, we felt like, "Nah, man, we are going to the moon again." And then pump the market, and again now turning around by looking at some other the long term, the growth, the ratio and data point. Typically, guys know that whenever bank the Fed tighten their policy, it takes 12 to 18 months to see that effect. So you can't see within 3 months, 4 months, hey, now that they tighten it up, why is going down? It takes time. Because of that, some of the banks like BSB, you saw that their business practice, they have been doing it. They also took the risk on the lending side. They also took the risk on their investment side. And they are getting hammered because some of the inside struggling how they're going to be maintain the day-to-day operation. Hence, you'll see some more surprise like this going to happen. Okay.
Would you say that it'd be healthier if the interest rates like stayed around 5-6% continuously, not this back and forth of quantitative tightening, QE, back and forth, quantitative easing, quantitative tightening? Like, would that be healthier?
QT and QE, yeah.
I think someone like Yasmin might be the better person to answer that than me. But while I'm looking at this data and knowing that, hey, what might happen? And let's say I own stock like Amazon. I'm just giving you an example. This is just an example. I believe in what Amazon is doing. So when things like this happen, and then maybe Amazon or like some of the business, you know the company, you know, you believe in their business model, believe in growth model, Amazon, Microsoft, they got hammered enough that you think in this rough time companies like this is going to turn around. So this is your chance to add some more. That's why I said I don't do day trading anymore. I don't have time for this because of my other obligation. But then I have some price point that I'm putting in, and just I have my order sitting in. If it gets executed, I don't do all at same shot. Then I get a notification, hey, got it. Then I say, hey, what's really happening in the market? Something got hammered. Let me put in next order. Then some of the strategies like what Jay mentioned, this is great strategies. I do the same thing. I have stock, I have option, I sell also, I do the covered call, I sell covered call, and I also have the put. So basically I sell put also based on same asset, but I'm going to use multiple strategy on the same side, on the asset side. Like when Jay mentioned that he buys put for 4 months ahead, I sell put 6 months ahead. Yeah. Okay. So then if it gets, then at some point I see the, because I am working with, spending time learning that business, and I know I have go better understanding what's really happening, especially even let's Microsoft. Microsoft, I am heavily invested in the Microsoft, and what's happening in the Microsoft side. I strongly believe this company like this is going to go much higher. If you see there is a price point you like the company, buy it. It's going to pay off long term.
I agree with you, Mushi, as well. I think it's an amazing. I'm not a big Microsoft person
Mhm.
because I can't stand Gates,
Hmm.
but
He's not even in it anymore.
that's my emotion. And
He's not even in it anymore.
yeah, I know, but the man is
Yeah, Mushi.
accumulating, right?
Right.
But
Mushi, this is Jay. I mean, company like Microsoft, do you buy leaps and then sell calls against them?
Yep, I do that too. Correct.
Okay, that's good.
And
Yeah.
whenever, exactly. That's why I do not go to. I saw the black box type of this. I invested in black box before. I feel like it's like it teaching you some of the behavior. If you are not a really true day trader and have a lot of money sitting there, they celebrate their wins. But sometimes they don't talk about their losing part, and that kind of got me biting. I lost some stuff with for by listening to some of the people they are getting, and that kind of influenced me my decision. Then I try not to be even part of any of this. I just stick to what I know and stick to my that basic simple, and it makes me money. Okay. So whenever I mentioned that things like this happen, it gives me a perspective that what's going to happen here. We know the growth market is already got hammered so much. Companies like Microsoft, company like Google, company like Amazon, there are some business practice also they readjusted. But now what you are going to see, some of you, this is, please, by all means, it's not investment advice, my opinion only, because banking side, some of this is going to get tightened up. You'll see these, some of this growth equity got so down that they are the one going to be able to be survive in this market. When it they do, you remember last quarter, they all came up in their forward and they all readjusted forward, and market kind of in a way didn't hammer them too much. They already, some of them made a very conservative forward this coming, and said this is going to happen, this is going to happen. Even they don't go close to it, it's an opportunity to add some of those in next 2 to 5 years. If you have a goal that, hey, let me, is there anything can I invest in, and then know that this company, worst case, if we go through recession, these companies are going to be surviving. Then companies like what I said, Microsoft, look at this guy, why would they go invest $10 billion on something like ChatGPT? This is like crazy. But they made the valuation of the company over $30 billion. There has to be something behind it. So when you start learning those wisdom behind it, what they're really doing it, they are playing a big chess game. So try to ensure, use this information, that that who do I spend I invest in? Invest in the business that you really enjoy reading about or learning that their direction, and then take advantage of those volatility. And then just like Jay was mentioned, some of you doing, you use multiple strategies on the same asset, and you are going to be ahead. Okay.
The other stock is Nvidia, right?
And Nvidia, with those semiconductor and AMD, so those who is looking at AMD, Nvidia, there also is a very good market to be in.
Nvidia also aren't they also in Chat GPT? Anything to do with Chat GPT, by the way. If anybody has not looked into what Chat GPT can do, you'll realize it's going to wipe out all the other apps that use like Microsoft Office. It's going to be made redundant.
I'm using it. I've been using it lately. It's amazing.
Yeah,
I have to get into it. I heard it's amazing.
It's scary. It's scary amazing. Like
it is,
Yes.
right. It is. Well,
you give it a few words in English and then it does it for you.
Yeah,
correct.
everything. It's pretty robotic in terms of
Yes.
what it can do.
So yeah, it's going to enable us more productive. You just have to use the tool in your benefit, right? So it's just like any way that for cell phone or any tools are there. If you learn the tools best way, you'll get a lot of out of it too in your benefit. Okay. So let's see now these you guys already have seen, but I'm so surprised to see and happy to see what you just saw last week. You see that when you see tech company, all these things happen, but tech really, Nasdaq is shining in the moment.
They're dying to come out, right? They've been
Yep.
beat up so much.
So they got beaten
They're
up so much, and now you are going to see the money is rotating in the business,
the
not
tech
like individual sector. So don't go by, that gonna happen, that gonna happen, unless you buy some of those ETF on the sector, business area sector that you really care about. Like Yasmin mentioned, there is semiconductor. If I invest in Nvidia, what I do, Nvidia, there are some ETF also in that same sector. So I'm going to try both same time. So that way I'll break down my ratio. That way, in case one of this company goes down, but in the ratio of the ETF side, I'm doing okay. Okay.
But there's something, Mushi, you said we should not go past, which is credit is going to tighten. That's a fact.
Yep.
Liquidity is going to tighten. That's a fact. Why?
It's gonna happen.
Why, guys? Know what's going on underneath. It's not just about the behavior of the stock. It's because the regulators are going to come down heavily on the banks, and the banks are going to hesitate to lend. And it's the small businesses, which is the majority
they are going to get hammered. Correct.
Economy are going to get hammered.
Yep. This is exactly the reason you see that slowly I said, invest in the business, like where
the big business. Yes.
Big business, what's going to happen? Worst case, Microsoft has a tons of cash. They can go company like ChatGPT. Oh, I will buy the other 51%. You are struggling in the other side of the business. I'll finance you, but sell me this share on this side.
Yeah, just give me some shares of ChatGPT.
Yes, right. From this side, then they'll try to take over. And you guys already, if you read the history of ChatGPT, see who founded these people.
Amazing. Amazing.
Right.
Scary future.
But they also got surprised when Microsoft came along. Why would they invest this much money? Guys, no, Microsoft already, when they made the deal with the 10 billion, they said they are going to recover their money in 2 years. In 3 years, they're getting their money back from the investment. Now they're the one driving the direction of ChatGPT, how it's going to be in enterprise.
Yeah.
So when you have that big, although you don't own 51%, but you have the direction of the product and where it's going, some companies like Microsoft, you just bet in them. Just on as a bet, invest in them if you truly believe that these guys know what they're doing.
And guys, Google lost their edge, by the way, because they should have been on that leading edge. But they went to sleep at the wheel, and Microsoft overtook.
Yep. This is Microsoft chance now kind of take over the percent of the business they lost before from the big Google, and all the investment they made, or so much investment Microsoft made the wrong way. Satya Nadella is now turning it
Satya
around.
Nadella, man,
Yep.
brilliant.
That guy is genius. You just watch what he does. But in the same way, and I'm not saying that nobody is genius. Google also just couldn't were too late on some of the areas. But we'll see. So next week, guys, like I am just like many of you, I don't know what's gonna happen. What's gonna happen tomorrow, but there are some assets that I have in my long term, and since my family issues that I do not do day trading or things, I'm just staying a little bit on the side. If I see the some opportunity to get in some of the assets that I believe in, I will get in. One of the things that I have done on short term basis, like companies like Netflix and things that I had it, I kind of offloaded them because I thought at some point they're coming to turn around. It just didn't happen. That and the Disney is another one. I think I see that I'm keeping an eye on this. I really wanted to get in when their new CEO came in, but I just think they're still going through some of the trouble. Hopefully that a few months, if they're starting out what's happening with their governor and stuff, maybe I'll get in. But I'm watching some of the business that I believe in, it will turn around.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.